Good afternoon, everyone. In today's video, we're going to review the futures volatility box performance for today. And the two places where we really had a lot of trade opportunities were the Nasdaq market along with the copper market. In Nasdaq, we had three trades. All three of those were winners, which is atypical, but that was awesome to see, where we had positive $1,560 there on a total of $2,400 risk. And then in copper, we had one trade which hit both our first and second targets. So that was a beautiful winner for a positive almost $400, bringing us total to the day for a positive 1957.50 across the two markets. Now, in the morning, I sent this note out to all of our members. Let's go through it real quick, but it takes you through all 9 markets along with which model we were using on which market. So the S&P, the Dow, the Russell were all on their scalper models, and I'll show you the test in this video. Be a little bit longer, but we'll go through the entire process. Then the Nasdaq, again, same thing. We had the scalper, but we also had a test. We were making sure that we hit 10638 before 10689. But if we did hit 10689, and this is the actual price on the NQ futures, then that was our sign to switch on over to our aggressive volatility box. Now the bonds also aggressive, and we also included the scalper this week on the bonds. And then copper, crude, aggressive, natural gas, aggressive, but also more volatile than copper and crude. And then gold, aggressive, but similar to the Nasdaq, we also had another check where if we hit 1803.2 before 1811.4, then we knew that, hey, we could continue to use the aggressive models. Otherwise, if we did hit 1811.4, then we switch on over to our doomsday aggressive. And so that was our plan for the day, this action plan where we had this laid out at 7:30 a.m. Pacific. And if you did have the volatility box in front of you, you could have gathered all this information by 7 a.m. Pacific. And so that's how early you're able to prepare for the day. Now in today's video, let's actually dive into the charts. I'll try and focus on the Nasdaq and copper so we don't keep it too long, but let's go through the trades there and see where the opportunities set up. All right, so if we start with the NASDAQ market, I'll go ahead and zoom in on that first hour so we can start with that first hour test, which is the basically first process that leads us into the entire day and helps us assess volatility across all of our markets. So now if I start by drawing that first hour line test, which is that yellow line, I'm just drawing this out so you can see it, then we're checking to see if we had a breach of the cyan entry line of either side on the NASDAQ market. If we do see that breach, we'd like to see if price action respects our volatility box model lines, or if we see that the buyers or the sellers have control one way or the other. So now, in this case, we saw that we had a breach of the lower cyan volatility box line, but we did see the follow through from there. We also had the breach of the upper volatility box cyan entry line. And now if I extrapolate this almost like a line in the sand so you can think about that, our goal is to see, hey, who has more control from this point? And this is before we have any capital at risk. But we've seen that our cyan line is breached. Now we want to see, hey, do the buyers have control, in which we essentially move price action up above and outside of these clouds before we see an equal and opposite follow through by the sellers. We'd like to see who's really holding control right now of price action, and if the sellers are able to come in and at least defend this price point. Now, by defend, what we're looking for is for price action to hit what would be our first target, which is from our entry line to the outside of the volatility box, which in this case was 20.78, and we see that we did make a move of 23 points. So in that first case, we did get the follow through. The sellers did have control, and this still passed that first test, hey, that we can continue to use the scalper models. Now we see that we had one more breach right here where price action came back into those cyan entry lines, and we're looking for the same sort of thing. One more time, we saw at least a follow through of that 20 points, and that was then our okay, giving us the confidence that, hey, we should continue to use the scalper models for the rest of the day. Now, if I zoom out to show you the rest of the trades for today's activity, we had our first trade in that next hour where price action breached our cyan entry lines. We then had our edge signal, which is a second confirmation in our trigger to get back in. We had price action hit our cyan entry line one more time, giving us our entry. Stop is outside of the volatility box where we've given it 24 points of room. And our first target is that same 24 points, which we do get in this little bit of flush down lower. Now, once we hit that first target, our second contract stop is moved to break even. And at that point, we're just waiting to see if we hit our target, which was at this great target line. Also happened to overlap with that 1272 extension. But in the case of the NASDAQ, we continue to reverse, and that second contract was taken off at break even. So this was the first trade in which we had a positive 24 points, and then the second contract was a break even. Now in the next hour, we had no breaches, so no trade. And in the hour 9 to 10 a.m. Pacific, we had our next breach. So again, one more time, price action hits our volatility box entry lines. We then get the edge signal, and we're waiting for an entry at our cyan lines or better. Now in the second entry in the Nasdaq, you'll notice that we did make the move towards our target before we got that re-entry. The minimum move you were looking for was 19.42 points, which if you take a look to see what we actually got, we made a move of 20.87. And so at this point, when we did get that re-entry, when price action's coming back in, this is after we've already hit that first target if we had gotten a fill in the same entry. So retests are not valid as part of our trade plan. If you are feeling a bit more aggressive, I've talked about this in previous videos where it's that first one, then that second retest still works, but it's that third one which usually ends up taking you outside of the volatility box. And so in this case, this was that second retest, which did also end up working as well, but wasn't a valid trade. So at this point, our only one trade so far was on that 7 to 8 a.m. Pacific hour. Now in the next hour, in that 10 to 11 a.m., this is where we got our second entry. This is where price action hit our volatility box entry lines. We got the edge signal, and we got our retest of the cyan line before price action continued to make a move up higher, both to our T1 and T2, which in this case we ended up taking off at 18 points apiece, where that target line had dropped a little bit lower, with the Nasdaq price action drifting a little bit lower in that earlier hour of that 10 to 11. So again, in this second trade on the Nasdaq, we had positive 18 points across the board in our first and second contract. Now, if I zoom back out, we're looking for another entry, same sort of concept. At this point, I should start to sound like a broken record where we're just waiting for price action to hit our cyan entry lines, then get an edge signal, and then we're waiting for an entry to get in at our cyan entry line price or better. Now you did get the entry here where price action hit our cyan entry line, then we also got the edge signal, and we had a retest of the cyan line one more time before price action actually hit our target, which in this case also the same 18 points via the scalper. And so across the board today, you'll notice that it was a scalper that kept giving you these really nice places to get in and out once all of our rules had been met, and we had a retest at our price or better where patience was rewarded. Now across the board in the indices, we did have price action breach our scalper lines into the final hour close of the market. In that final 15 minutes, actually, where price action hit, we saw our breach, and then we did bounce even into that 1 p.m. Close, where you had that final 15 to 30 minutes of trading, right? So if I show you that on the Nasdaq, we had that nice reversal with the edge signal. Again, not a valid trade with it being towards the edge of the hour, along with really the market close, but I did find that to be interesting. If you take a look in the S&P, something very similar as well, right, where we hit our cyan entry lines and then bounced from there. And if I go to a chart of the Russell, should notice something similar as well, right? So across the board, the volatility box today just worked beautifully, even on our most aggressive scale in the scalper models, based off of that note at 7:30 a.m. Pacific, despite what felt like a more volatile day, at least across the board in some of the smaller stocks. Now, the next market that we'll take a look at is copper, and I'll keep copper a little bit quicker. So if we zoom this out, and then in copper, we load in our aggressive volatility box, which is the model that we were supposed to use. So if we start by drawing that same first hour line entry test, then you'll notice that we didn't breach either side's cyan entry lines. That was your permission to continue to use the aggressive models, and our entry came as price action breached our cyan entry lines in that 8 to 9 a.m. Pacific hour. We're then waiting for an edge signal. We got the edge signal, got an entry better than our cyan entry line price, with our stop still outside of the volatility box. So a question that we get a lot of times here is what happens at this point, right? Do we now bump up our entry along with our stop? Is the stop wider, given that you got a better entry? And my simple answer is no. My trade management is still based off of what would be the original trade. We've just gotten a way to reduce our risk. So once we got the edge signal here, any price better than the cyan entry line is all fair game. And so I got filled closer towards the beginning of the cloud. The stop now in this case was moved outside of the volatility box, where you even have the luxury of giving it a little bit more room since you have this extra bit of buffer from getting a slightly better entry, but that target is still the exact same what it was, right? It was the same 57, for that first target that we had in copper. And if I zoom out, what you should notice is we respected the outside of our volatility box line, and copper really just chopped sideways here before we then got our flush down lower, but this happened towards the latter half of the day. So the trade in copper did require you to be fairly patient, and took what? almost 2 hours to pan out, a little bit more than 2 hours, 3 hours for us to hit our second target, which was a nice target, right? Our second target is still based off of that target line, which is our great target line, which if you notice, zoomed out, we hit basically to a tick before price then started to reverse from this point. It was this candle in which we hit the second target, and then you'll notice price started to reverse from there. And so that's, again, the power of using the volatility box models. For those of you that are wondering how it's different from other volatility ranges, you'll notice how across a variety of markets, you have a variety of different models to adapt to each day's volatility and to then trade that day's volatility, which in today's case was in the Nasdaq and Copper futures markets. All right, hope that video helps for our new members to get an idea of how trade set up today across both markets and how to repeat that process not only tomorrow, but also every single day. All right, take care, good luck trading, and we'll see you in the next update.